when you're running a pro forma is just a fancy word for saying a future projection. And a future projection is really just a fancy way of saying a story that I know is wrong. It's a false story about the future. It's a fiction.
Mm-hmm.
Okay. But we have to tell ourselves something because otherwise we'll never make an investment. So we say, okay, I'm sitting here today at time zero, and I'm going to look out some number of periods into the future, 5 years, 10 years, maybe 3 years, depending on the nature of the investment. And I need to tell myself a story about how things could play out in terms of cash flow, in terms of events, in terms of occupancy, in terms of the attractiveness of the building holding up over time, those types of things, in terms of new jobs being created in the area or jobs being potentially lost in the area. And so every property sits in its environment and is subject to all these forces of supply and demand and all of these dynamics of the capital markets. And you need something to help you organize all of this information.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Bruce Kirsch. Bruce is the founder of REFM and the creator of Valuate software, the fastest growing property and valuation and investment analysis platform in the world. He's also the co-author of the Real Estate Finance Investments, Risk and Opportunities textbook and associated REFAI Certification program. Bruce, thank you so much for joining us on the show. And how are you doing, my friend?
Oh, my pleasure. I'm doing great. Thank you so much for having me on, and hopefully I can be helpful to the audience and give people some new perspectives and maybe some information that'll help them do their jobs better and smarter and faster and so on. So
absolutely.
happy
Looking
to be
forward to
here.
it. Yeah, it's a great topic because it's one of the most important is we talk about, purchasing very large assets, in many different asset classes. We had mainly multifamily, but a lot of self-storage and single tenant net lease and mobile home parks and a whole bunch of different stuff. So I understand as far as kind of your systems and platform, they can be able to kind of provide solutions for that. But before we kick things off, if you don't mind, just telling the audience a little bit about your background and a little bit about your company.
Sure, absolutely. So, my background, I came to real estate in a little bit of a roundabout manner. I was a film major in undergrad. I studied communication, and I don't think I opened up Microsoft Excel more than 1 or 2 times when I was in college. Partly because it wasn't part of my coursework, but also maybe somewhat out of fear, because I did not really consider myself to be very much a numbers person or a quantitative person. And so, fast forward 20 some odd years, and I'm now working very much in that part of the world. It's amazing how things can change and how life can take you different routes. But after I got my bachelor's, I worked in the mutual fund business, I worked in the entertainment business, and didn't really find my passion. At least I didn't think so at the time. And so I went to business school and basically had to make a decision pretty fast about what I wanted to focus on, because business school it's really just 18 months if you're going full time. It's not sort of the full 2 years. So you're in and out of there pretty quickly. And the dangerous thing about going in not knowing exactly what you want is you can find a cheer squad for every decision. So you could find a cheer squad for going into consulting, going into investment banking, private equity, technology. There are cohorts of people who are excited about all of those sectors. And so you'll never get an indication that you're choosing the wrong thing because you will select into those groups. So you really do need to have, I think, a good sense of yourself and what you will be able to take gratification from and make contributions towards over the course of, a 30 or 40-year career. I mean, we're living a lot longer than we used to. God willing, people will be, of our generation will be working well into our 70s, maybe even, beyond our 70s, into our 80s. And so it's a long road, and you want to do something that you truly enjoy. And I was basically sitting in my studio apartment, in this tiny little apartment in Philadelphia, and I was just sort of making lists, what I want to do for the next 40 years, that type of thing. And I just went through all the major sectors, and the big picture is you're either investing or you're providing services to investors. That's sort of the deal. So you're no matter what sector you're in, either you're deploying capital or you're supporting the deployment of that capital in some way. And the same goes for real estate. How do you make money in real estate? You're either a capital provider or a service provider to a capital provider. It's kind of that simple. Everything falls really in those two buckets. And so I came across real estate after crossing out basically every other possibility. And I started peeling back the layers of the onion, and the more I learned, the more I liked. And it was a neat opportunity for me to think about that career trajectory, because I didn't have anything to do basically for 2 weeks. And I was able to just sort of walk around Philadelphia a lot, thinking in my head about, okay, this is what I'm going to be going for. And you get to just look at all this awesome architecture. So I was having a lot of fun, quite frankly, just sort of thinking about all the possibilities ahead, and living, through the eyes, or looking through the eyes of someone who had never lived in a dense East Coast urban area before, and just enjoying all the beautiful architecture and the urban fabric.
Beautiful. And as far as kind of like the company that you started, as far as kind of like, for valuation and the softwares and the platform, kind of how did that kind of grow? That like kind of like initially, I know you said that you had to make a choice and stuff, but did you learn how to, work Excel? Did you take any courses, or
Yes.
how did that all come together?
So you do not have a choice when you go to business school. You're just thrown in the deep end, and your homeworks revolve a lot around quantitative analysis, and it's Excel's the most widely used calculator in the world, bar none. So that's generally what you're going to be using for the majority of your homework assignments and projects. And so you just have to get in there and start to learn. And it's intimidating, because you'll have these people who are coming out of maybe a stint in investment banking, and when they're doing stuff in Excel, there's like smoke coming off the keyboard, and you're sort of fumbling around with the mouse. So it's you need to get to a place where you can use it as a tool. And it doesn't make decisions for you. Software doesn't make decisions for us. Software is intended to help us organize our thoughts and apply trusted analytical frameworks to decisions, and inform our ability to make decisions using our own judgment. And so you don't want to let any software, Excel or other, govern your decision. You want it to inform your thinking as a business person about making a bet. At the end of the day, all we're doing is making bets. We're betting on buildings, we're betting on equities, we're betting on bonds. It's all just betting, because nobody knows what the future holds. And
Exactly.
so, the idea of valuation, and the idea of, well, how do I know that I've made a good investment? For instance, at what point do I know I've made a good real estate investment? Probably not until I've exited that investment, quite frankly, right? You think that you've made a good investment. I bought at the right price, right? If you say, hey, I'm getting a 10% cash on cash yield in year one, that's great. Okay, let's talk at the end of year two. Let's talk at the end of year three. Let's talk at the end of year 10, right? And, tell me how it all shook out. So it's all a matter of, at what price do I like this investment, right? Every investment would be a good price. I mean, if I could go and get a house for $0, right, and you live long enough, you're going to make money on it, right? People are going to Detroit and they're buying houses for, literally thousands of dollars, like four or five or $6,000. And if you can execute on that investment and hold it long enough, right, that can be a really good winner. To go in and pay $100,000 for a property that's really only worth $5,000 obviously would not be a good move. So it's just an interesting notion. And when I was growing up, I would always hear about these big transactions and, oh, this building sold for X hundred millions of dollars, and it was just really more, I think, a curiosity than anything else. Why is it that somebody paid a particular price? Why did they think that that was the quote right price to pay?
If you might, could talk about a little about the software platform, which is very interesting. As I mentioned before pre-call, that I interviewed an analyst and was kind of talking about his process of going through numbers. And of course, he had mentioned there, a little bit in your intro there is regarding, when you purchase, you're not sure how it is going to make out in the future, but like I said, you do your best to kind of analyze and try to do that. And most of the common saying for real estate investors is you make money when you buy, as far as kind of like,
Right.
making sure your numbers are accurate. Can you kind of test the importance of proper financial analysis and maybe get an introduction of kind of your software and what type of investments does it support?
Absolutely. So, when you're running a pro forma is just a fancy word for saying a future projection. And a future projection is really just a fancy way of saying a story that I know is wrong. It's a false story about the future. It's a fiction. Okay. But we have to tell ourselves something, because otherwise we'll never make an investment. So we say, okay, I'm sitting here today at time 0, and I'm going to look out some number of periods into the future, 5 years, 10 years, maybe 3 years, depending on the nature of the investment. And I need to tell myself a story about how things could play out in terms of cash flow, in terms of events, in terms of occupancy, in terms of the attractiveness of the building holding up over time, those types of things, in terms of new jobs being created in the area or jobs being potentially lost in the area. And so every property sits in its environment and is subject to all these forces of supply and demand and all of these dynamics of the capital markets. And you need something to help you organize all of this information. So I think at its most basic form, a software, whether it's a very nicely built out Excel spreadsheet, which we sell, Excel-based templates, or something that's based in the web browser that has a more sort of modern, slick look, and we have a software called Valuate, which does discounted cash flow analysis. It needs to help you organize a lot of information, okay? And so you have information that you are going to put in, the assumptions or the inputs into the model, and then it's going to produce some outputs, and that's just basic math. Real estate math is not incredibly complicated. Okay, that's why I can do it, because I was a film major, and I can still do these things. Okay, so it's not terribly complicated. It's a lot of addition and subtraction, right? And keeping a vast amount of information organized in the right place. And so, as I said, we have Excel-based templates, which are available for all the major property types for ground-up development. And we have our Valuate web-based software, which is really good for the screening of potential acquisitions, the pricing of potential acquisitions for existing income-producing assets. And so we have sort of a tool for every job. They say there's a right tool for every job. And so generally speaking, people will gravitate towards using Microsoft Excel for developments, because developments always have 1 or 2 or 3 wrinkles that make it unique and different from the prior one. And so as much as you would love to be able to just use the last spreadsheet that you used on the last deal, there's always a couple of square pegs that you just can't fit right into the structure that you have. And so you need the ability to have total flexibility, the ability to open it up and see the guts of it and change things around and so on. Whereas some other types of transactions can be, in fact, more straightforward. Like if I'm going to buy, a triple net out parcel, bank property, sitting in a mall parking lot, and it's just a single tenant on a triple net lease, there's not a whole lot of moving parts there. I'm going to buy a multi-tenant retail plaza itself. That's a different story. So there is definitely a right tool for every job. We've been providing tools to the marketplace for the last 10 years. We've expanded the tools that we have provided over time. You have back of the envelope, which is sort of your preliminary type of analysis. And then you have much more detailed pro forma multi-period analysis that's going to generate an IRR. And so the IRR is just one of the metrics that you're going to consider when evaluating a potential acquisition.
Beautiful. Well said. Yeah, like you had mentioned, like I said, it's a tool. It's it's real estate math, and it's something that never changes. So it's like I said, it's calculating that. But the thing that I like about it is that the way you kind of organize the data for kind of the use of the everyday investor to plug in the numbers and able to kind of get the the numbers for it. Kind of talking more about the features, is it set up where, say, because I interviewed a lot of investors, and they're looking at maybe 100 deals before they make an offer on one, so they kind of crunch some numbers to see if it pencils out before they kind of enter in a tremendous amount more of detail once they get kind of the stuff. Is it kind of organized in that fashion where you can able to quickly get some rough numbers before you get a little deeper into the weeds?
Well, all of our Excel templates have a dedicated standalone back of the envelope tab in them so that you can just run a very quick analysis. Like, if it's a development, you're gonna basically solve for some going in yield, some going in cap rate upon stabilization, and then back into the land price, right? So if you get a flyer for a piece of developable land and they're asking $5 million and your back of the envelope says the land's only worth $1 million, just move on, right? There's no conversation to have there.
Right.
And so if that gets you through one and then you have 99 more, you have to keep moving, right?
Exactly.
You don't want to spend any more time than you absolutely have to on a loser or some, not a loser, but something that's infeasible.
Exactly.
Right? So, that said, if you run your back of the envelope and you say, well, I think this deal could work at, 4.3 million. Okay, maybe there's a conversation to have there, right? So that's an email that you would reply to the broker and say, yeah, I'd like to talk a little bit more. But if you're just off by, hundreds of percent of price, you got to move on.
Exactly. And a lot of people are also using this to, create, presentations for potential investors. Does it also give you the ability to, or maybe you just have to just extract that data, put it into like a PowerPoint, but does it give you the ability to kind of say, here's the IRR, here's the cash on cash return, that you can be able to kind of display it in the format that's, more, pleasing to the eyes for investors?
Yeah. So it's a funny thing. Us human organisms, we're very superficial, and we just by our nature, we're extremely judgmental in less than a millisecond about anything that's put in front of us as to does it seem trustworthy? Do I like the way it looks? And that's just human nature. So part of the battle is not getting a strike called on you before you've been given full consideration, right? So you want to be able to present something to investors, and investors want to see something that on first glance looks trustworthy, looks complete, looks correct. And that's all. The operative word there is looks, okay? It's about the apparent nature of it. Whether they agree with those numbers is going to come only through further study. But if you can't get them to the point where they want to invest time to study it further, then again, there's nothing to discuss there. And so you've lost that opportunity. So yes, all of our templates, the Excel templates and the Valuate software are put together and formatted with that intent of this is going to go to some other potential stakeholders. This is going to go in front of people's eyes who could potentially enable this deal, right? They could provide debt, they could provide equity. So it needs to look neat, it needs to look tidy, it needs to look accurate, it needs to look professional and crisp. And so we understand that the spreadsheets and the Valuate software are not just going to live within the confines of that principal or that sponsor or that investor. They're going to travel, and people will evaluate them, as I said, in that instant. And we're trying to give people the ability to get the benefit of the doubt if there is a doubt, so that they can get full consideration.
Absolutely. Kind of speaking a little bit, we had mentioned just your different platforms that you have as your training platform. Can you kind of talk a little bit about what people can get out of that, and is it on the financial analysis side, and is it other stuff that they help them to make their job, do their job better?
Yeah, so we've been doing Excel-based financial modeling training for commercial real estate for the last 10 years. And this is something that I had wished I had had dedicated training when I was, very young in the business and starting out. And basically, you need to be able to understand the business, okay?
Hmm.
Again, the spreadsheet is a tool. It's a representation of business realities. It's a representation of dynamics that are in contracts, that are in leases, and so on. And so the business is the fundamental driver of everything that's going to happen in a spreadsheet. So that's just first and foremost, is how does the business work? How does a lease work? How does a joint venture investment cash flow waterfall work? What are the levers? What are the triggers that make things change from one type of situation to another? And so we have, just through REFM, a whole host of self-study titles. Most of those are focused on technical modeling skills, so different types of transactions, so ground up apartment building development. Some of them are more foundational, and you can get certifications for them, but they're really skills based. Our latest certification, which is really phenomenal, is called REFAI, R-E-F-A-I, Real Estate Finance and Investments Certification. And I've had the pleasure and privilege of teaming up with my mentor, my former professor, Dr. Peter Linneman, to use his textbook, which has been in publication for 15 years, and that I've had the privilege of working on and with him, and use that textbook as the backbone for really the equivalent of a semester-long type Real Estate Finance and Investments 101 course. And so what we've done is we've put together a curriculum which is rigorous and a format that allows people total flexibility in completing the modules at their own pace, on their own schedule, over an unlimited amount of time, and get to a place through the course where they can feel confident approaching absolutely any real estate decision. Not to say they're going to make the right decision, but the confidence to approach any situation and say, okay, how should I look at this? What are the variables? What are the things that I should be looking out for? How should I look at the cash flows? How should I apply any particular framework? What discount rate should I be using? Just lots and lots of considerations like that. If you can step into any situation and have that confidence, the ability to overlay a trusted framework, that's phenomenal, right? And I think you would probably agree that no two deals are alike. Every deal is a snowflake, so to speak. Right. And so there's always something new, at least in the beginning of your career, for most of your career, where you're saying, oh, I've never seen that before, but it's now part of the calculus. And so the REFAI, we just call it REFI because it's a lot easier to say that way. REFI it's a terrific program. And, we have exclusive video content from Dr. Linneman and from me, and there's 500 questions across 30 quizzes and exams. It's not easy. Not everyone will pass. And that's what makes it valuable, because it's not a, hey, all I got to do is show up and now I can put this on my resume. It's a 450-page textbook. There's dozens of hours of video and audio that are totally useful and practical and enriching. And, I think that's what makes this probably the most unique offering of its kind is the practicality of it. This is really for practitioners. It's people who are going to be working in the business. It's not for people who want to go and be real estate academics, and there's nothing wrong with that. And the book, by the way, can be quite helpful if you want to be a real estate academic. But the main distinguishing feature of the book since day one was that it always had this bent towards practicality. This is how it's done in practice. These are the things you need to consider in practice, okay? There are very few Greek letters in this textbook, okay? Whereas some of the others, you open up to any chapter and you're going to be hit with a theta or something, right?
Yeah, that's very important because you mentioned practicality is that, people are in the business, they're doing it. And plus, especially when you're dealing with investors or stakeholders, having the confidence that you're valuing your numbers as best as possible will then present that over to the stakeholders and investors to say that, I trust in looking at this number, that they're fully educated and they're immersed into it. You mentioned that deals are different. Things can change. So you're able to, have that training to switch on the fly to make sure you have the best possible numbers. Of course, every investment is not guaranteed, but at least you have that confidence based off all of the numbers and the variables that you be able to kind of go into it with a more open eye and have a better outcome. So that definitely that's awesome. So, and people can get information going to the website, or is this?
Yeah, so for REFI in particular, it's getrefm.com/REFAI, and there's all sorts of information there, and we're happy to answer questions. There's a big FAQ section at the bottom, but feel free to email us. Folks can email me directly, bruce@getrefm.com, and I appreciate the opportunity to be on here. It's we're lucky if we find ourselves in a business that we really enjoy, which is a dynamic business, a growing business. We get up and every day and do something fun and challenging, and hopefully make some money too.
Absolutely. Bruce, it was a pleasure to speak with you, learning about this, and I encourage everyone to check that out because, again, it's nothing like that I ever seen as far as kind of like the detail, especially in the training program, but a lot of useful stuff. The people that's listening on this call are real active and passive real estate investors. So it's very important to know the numbers and know how to approach it in the best possible manner. So I'm glad that you're able to put this product together and out there to the world. So Bruce, thank you so much again. Really appreciate your time and look forward to connect you again soon.
Okay, thanks so much and best of luck to everyone. Thanks.
Thank you. Take care. Bye-bye.
You too. Bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.